these products were priced pre-COVID.
Mhm.
These products were priced the telesales generation.
Yeah, before the boom. Yeah.
For the telesales boom. These products were not priced out for the current economic market.
Nope.
These products were not priced out for every Tom, Dick, and Harry to pick up their phone, call a Facebook lead, and sell them that product with massively lower persistency. These products were not priced in to expect the extent of fraud that would become broadly available when the e-app era came out.
People love the short videos.
Yeah,
People
been
love the short videos.
A ton of rumor, a ton of speculation, a ton of substantiation if you know who to talk to.
Mhm.
But there's been a ton of what appears to be market contraction. And by market contraction, I mean carriers exiting the market. But what's interesting, I was just on the phone with another agency owner, and he also confirmed the news from yesterday that one of these carriers contracting, Colombian, the issue is on the reinsurance side of things,
which I think is so interesting.
I think a lot of agents don't even realize that there's insurance companies and then the reinsurance companies that have massive influence over what happens. Nick, what the heck is happening?
So much influence over what happens, like reinsurance and as final expense life insurance agents, like reinsurance is never a thing that we have to think about. But like if you're writing large policies, like you're very aware of reinsurance, because when stuff ends up hitting reinsurance, that's when things go sideways for your fully underwritten policies. You write a $1 million whole life policy that has to get covered by reinsurance, and boy, that becomes tricky fast. Your client better be super healthy and have like lived like a saint, because they're going to start digging into their personal history.
Nick, I bought a $50,000 10-pay from a surety, and my damn policy went to reinsurance in the underwriting process.
Yeah, well, yeah, right. Like sometimes the reinsurance rates on these companies are very low. I know with KSKJ, rest in peace, who's also exited the final expense market. It's not just the IMO that they fired; they exited the final expense market. Full stop. They claim that their new product is still suitable for the final expense market, but it is no longer a final expense policy. Their final expense product is gone, and that was because of reinsurance also. And so Colombian because of reinsurance, KSKJ because of reinsurance,
Lumico
also I think because of reinsurance.
Well, they were under IPTIQ, which was their parent brand, because they had Ellipse and Lumico Life, they had Term, they had MedSup, but they were really just affiliated with Swiss Re, and Swiss Re euthanized that division. So in a sense, it was also a reinsurance issue.
Yeah, and the Medicare supplement policy, all of it, like everything, that whole gone. That's not just a final expense thing that's gone. It's interesting to hear the speculation. It's interesting that a lot of the companies that are contracting, American Memorial, which became True Stage, which became non-existent,
but purely through a captive distribution, allegedly.
Yeah, maybe it still exists through captive distribution. Maybe they went back to the captive model that True Stage used to have prior to the merger with American Memorial. I know there are theoretically exclusivity rights to American Memorial, but I mean, essentially, functionally the same thing, right?
Yeah.
Like they have limited their distribution to such an extent that they are now protected, right? So, and again, you're looking at largely this coming from a reinsurance situation, likely. Like, I mean, I'm not in boardrooms, so I don't know, but that is what the tea leaves seem to say, is that reinsurance is down on final expense.
Yeah.
And from the Medicare side, like companies are taking losses on the Medicare side. There is going to be market shifting on the Medicare side. Companies withdrawing from counties, companies contracting their policies, companies adding premiums to policies that used to be zero premium policies, companies eliminating non-medical benefits. There's a lot of market contraction coming. And I think it's very interesting to see what's happening. And also, I'm sort of excited. I don't know about you. I actually feel like, oh, this is this is so much shakeup that this is going to be like opportunity
Mhm.
levels of like large shakeup. We're losing some tools, but it's going to create a vacuum. And there's going to be a very large opportunity coming in here pretty soon. What do you think about the narrative that's going around that it's the telemarketers that are causing all of these problems? I don't know that I believe it, but that is the narrative.
Here's my theory, and a couple of people have agreed with it. I hopefully they're not just being polite. I think everything operates on a pendulum, both life, business, final expense, Medicare. I think what happened between COVID and now is there was a mass proliferation of telesales processes that were not
Yeah.
built into these products that were all kind of released around that same what's that? Here's more minutia. Were those the re-ratings? That was like 2020, right? Where they re-rated most.
Yeah, when the actuarial tables had to go into effect, I think it was just before the pandemic.
Yeah,
Because I
because we were
remember,
talking about New Foresters and New Transamerica and
Mhm.
CSO 2020. So
Yeah.
these products were priced pre-COVID.
Mhm.
These products were priced pre the telesales generation.
Yeah, before the boom. Yeah.
For the telesales boom. These products were not priced out for the current economic market.
Nope.
These products were not priced out for every Tom, Dick, and Harry to pick up their phone, call a Facebook lead, and sell them that product with massively lower persistency. These products were not priced in to expect the extent of fraud that would become broadly available when the EAP era came out.
Well, and see, and this is the thing, because the sales departments developed these new applications to help facilitate virtual selling, which was great for like legitimate agents who needed to be able to sell virtually
Yeah.
because, the pandemic shut down face-to-face sales for a couple of years, but created the unintended consequence of telesales became dramatically easier.
Mm-hmm.
It used to be a little bit of a pain in the butt to be able to get a telesales application pushed through, right? Usually involved doing a couple of three-way phone calls, or
Mm-hmm.
there were a couple of carriers who would do like email signature things. But like I knew guys who were doing telesales prior to 2020 who were mailing applications to people and like crossing their fingers that the signature page would come back.
Yeah.
Like that was not uncommon
Yeah.
in that era. you know More common was like three-way voice signatures, which
Mm-hmm.
were long and arduous. It used to be, to do a telesales application, just the application would take you about an hour, let alone the presentation time. So yeah, telesales became a lot more accessible, and you know lead costs went up on Facebook. Telemarketed leads became virtually impossible to generate legally. Illegal leads started to proliferate the marketplace that were generated offshore, so nobody could really track them down because, if the call center is not based in the United States, how do you use United States-based laws to enforce legality on that? Like a whole bunch of stuff happened
I heard it.
that I don't
I
know that
heard an
anybody
interesting
anticipated.
comment from another carrier rep, and maybe he didn't mean it this way, but this is how I took it. They're beta testing a new product that's supposed to launch in late summer, early fall, which probably means next year. And they said they chose the organization they did to beta test it because they're 99% face to face.
Mhm.
Does that mean it doesn't work yet over the phone? Maybe. Is that what they prefer audience wise? Probably. It's that I think that
Yeah.
that's what it meant.
Yeah, I think the insurance carriers, the good ones, the ones that are priced competitively, are recognizing that they would rather have fewer new clients that are higher quality clients than they would have more bad quality clients. I think there was a large assumption in like early 2021 that the law of large numbers would win out. And if we got 600% more
Hmm.
applications in, it doesn't matter if they're only 50% as quality. that the 600% more will carry the day. And I think what they're finding out is that that like 2/3, like not even half, but like 2/3 or maybe more of those applications are just money losers for them.
Yeah, I spoke to Lumico, and their issue, I believe, was tied directly into the part where they were part of a large telesales distribution that only sold their product that from their mouth had absolutely garbage persistency. It's not a bad product. Like I sold a few myself. The preferred rates were decent.
It's a fun
The modified rates were priced to take anything, and they were not good prices.
No.
Oh, the persistency on it was trash.
Yeah.
You know,
the persistency on we could talk all day about why going into final expense telesales is a bad idea if you are anybody other than a call center owner. If you're a call center owner, man, it's a license to print money now, but maybe not forever.
But with our final 4 minutes, one of the biggest YouTube talking heads has built a massive level of distribution that majoritively is selling over the phone.
Yeah, sure. It's great for him.
Yeah.
It's great for him. And here's the other thing. Like, I'm not even going to say that he's taking advantage, because I don't think he is. I think he recognized that there are people who want to work this way and don't care that they're not really going to make a lot of money. They just care that they've got something to do every morning when they wake up, and they're going to make enough money.
Yeah.
There are a lot of people out there like that. And like this has been a hard thing for me to realize and to recognize. Like, there are far more people who would be happy to take a guaranteed $60,000 a year instead of taking a potential $500,000 a year.
Absolutely.
But it makes no sense to me, but I recognize that those people exist. And our friend has also recognized that they exist, and he's like gone after that full force. And good luck, good for him. He's jumped into that market niche and is doing it better than some of the people who have been in that arena for a very long time. Seems to have happier agents than a lot of the people who've been in that arena for a very long time, and is making a killing himself. And most of his agents are making like $60,000 a year, and they're happy with that. And that's like it's hard for me to be like, okay, and like they know what it is going into it. But the persistency is not. I mean, I don't know. Like, I've not talked to him directly about his persistency, but I've kind of talked to him around this subject a little bit, and he's intimated that the persistency is not nearly as good as it is in other places, but he doesn't care. It's still a profit center for him. But the carriers care because it hurts their bottom line, and the agents should care. If they're a little bit financially literate, they should care. Now, if the agents don't care, and he doesn't care, or any call center owner doesn't care, like, I mean, it's not our job to keep the insurance companies afloat. The insurance companies need to like price their stuff affordably and have a reasonable understanding of how the world works.
Yeah, the person I was speaking to said that he suspects that one of these carriers is going to reemerge in 6 months with a significant repricing under a new reinsurer, with a likely way to return to the market because they've been in the market 100+ years. And they came out with a product that was aggressively priced. They're probably going to return to their roots of being unfairly priced or very conservatively priced. That seems like a natural evolution. But in our final 2.5 minutes, Nick, what happens next? We've already had 6 products drop from the market in 6 months. If this is truly a reinsurance issue, there's other carriers that are tied back to the same reinsurers. What happens next?
I think we're going to see another probably 3 carriers drop out of the market or significantly reprice and change. And I think we're going to see 1 or 2 carriers taking advantage of the vacuum, repricing, and improve. And I think we're going to see a large shift away from carriers being telesales friendly. And we are going to start seeing carriers making telesales type situations more difficult. I don't know. Like, I've long been of the opinion that carriers should be putting extra premium on remote signatures.
Interesting.
There should be a surcharge for a remote signature if you can't get digital signature is fine. But face-to-face agents, every face-to-face agent I know carries around an iPad or a Surface Pro or some sort of touch screen where you can capture a digital signature.
Mhm.
And there should be, I think carriers are going to get wise and say, hey, if you can't get a digital signature, we're going to put a 5% surcharge on top of that.
Yeah.
I think that would solve a lot of their problems.
Yeah.
I mean, I don't know if 5% is the right number. I'm not an actuary. I'm not actually a math guy. So that's a
Definitely
number I
not.
pulled off the top of my head. But
Yeah.
but I think that's maybe the way things are going to go. Or they're just going to get rid of the easy type to sign virtual signatures and go back to voice signatures and some of the things that require higher intent and are harder to forge. I think
Mhm.
forgery is a real big issue in this space.
Safe to say, welcome back to 2019, where you didn't have 18 different versions of the same chassis underwriting product.
Yeah.
And it's a little bit harder, but a little bit harder opens up new opportunity, better quality business. And hey, welcome back to the field. We're happy to retrain you if you forgot how to knock doors. Nick, I appreciate you getting on with me today. And we'll hopefully get this video out very quickly because this is a fast moving industry related issue. Take care and we'll see you guys soon.
Talk to you later.